Hey, look at that. It's always a win. All right. We're going to start on time. For those of you who don't know me, my name is Jen Glyzinski. I'm a full-time realtor with Keller Williams Realty, where I've been for the last 8 years. My partner is Lori Satushek, and I manage an all-women's real estate team here in Bellingham. And I'm so excited to chat with this panel. I've had the true privilege of working with all of these lenders in the past. And I gotta say, you guys, when I put the invitation out there, I thought maybe I would get 2 out of 5. And then all of you said yes. And so it's pretty awesome. And then when we asked you to send over, some of the awesome loan products, there's just so many to choose from. So welcome to Home Loans Decoded. We've got a lot of really great information to share, and I'm just going to open it up. I'm not going to make this super challenging on any of you, I promise. These are products that I'm not going to have you talk about every single one of them. And in fact, I'm just going to ask each of you some specifics about certain loan products, right? And we're not going to talk a whole lot about the standard conventional loans. I think that we know what those are. You all do them, right? These are things that you're offering now. And I don't know about you, but we've had to adjust quite quickly over this past year in some of the services that we're providing. So before I get going on that, though, I do want to say I get asked this question a lot, right? It is now still a good time to buy a house, right? What do you say to that? Right? So I'll tell you what I do, you guys. It hasn't changed. My answer has not changed in this market. It's the same answer that I had 5 years ago, 2 years ago, 1 year ago. And I'm going to go back and I'm going to ask my consumer a lot of questions. And together, we're going to decide whether or not it's a good time to buy or sell a house, right? And that's where we really need to start these dialogues, because everybody has a different circumstance that may be driving them to want to purchase, right? But some things that you might want to consider is that we're still in a market that is appreciating, right? We're in an area where the values are still holding. There's still equity to be gained, right? There's still opportunities to build wealth. The other thing to consider in a market like this, as we go into winter, is that there's less competition, right? In a market right now. So you start waiting, if you're going to wait for interest rates to go down or waiting for whatever it is that you're waiting for, you're going to have a lot more competition in the spring. So there's less competition right now. And for the investors that are out there, we still have really high rental demand. And investors are getting really good prices on their rentals. So I just want to put that out there, right? That as realtors, we're having to ask a lot of questions, but the overarching theme is that I can with confidence say that it's still a good time to buy a home. And for all of those reasons that I just listed. So without further ado, I want to introduce our panel in no particular order. I've got Becky Ferrar up in my top left on the screen. She's with Evergreen Home Loans. I've got Christy Sorenson with LeaderOne. I've got Melanie Pysden with CrossCountry Mortgage. I've got Jennifer Rogers with Envoy Mortgage, and I've got Randy Dorn with CMG Home Loans. And I just want to say welcome, all of you. Thanks for being here. Randy, I'm going to start with you. I'm putting you the one male on the spot. So I think one of the coolest products that you have is Home Funded. Can you talk to us about what that is?
Yeah, so Home Funded is it's kind of modeled after a crowdfunding program. It's kind of like a GoFundMe for your down payment and closing cost. It's unique to CMG. It's Freddie Mac approved. So what this does is it's like a social media platform, just like a GoFundMe page, where you can set up a profile, that's linked to your situation. And this could be something geared towards, say, a wedding, for example. You're getting married. You set this, create this cool page, wedding page, and instead of getting a toaster or a dishware, you're asking for funds for a down payment for a house. The cool thing about this is that you can do it. There's no time period. You could set this up for 3 months. You could set this up for a year and a half. It's just a great thing to save money for borrowers in a tough time right now, but also getting money from an untraditional source. Whereas typically it can only be a family member or an employer that can donate money to a down payment, right? Well, through this program, anyone can donate up to $5,000. Doesn't have to be a family member, doesn't have to be an employer. It can be friends from church, it can be your neighbor, it can be anyone, as long as it's under $5,000. And if you go through a Freddie Mac program, it doesn't have to be sourced at all. So they can deposit that money a week before, and then it's available in your account right then. No sourcing. It's all through this Fund Me page, home funded page, that will then get sourced into your checking account. So there's no sourcing requirement on Freddie Mac. Now, if it's used on a Fannie Mae product or an FHA product or a VA product, there is the typical 60-day sourcing, right? So Freddie Mac, though, allows no sourcing on this product, which is pretty cool. And with CMG, we also match 2-to-1 up to $2,000. So as long as somebody donates $1,000 to this account, we're going to contribute another $2,000. So it's really a cool program that gives the client an ability to save money, share it with people they maybe would have normally shared it with. Because a lot of people want to help. A lot of your friends and family want to help, but they either can't, or you just don't ask them because it's just, there's not a good platform for it, right? So this is a great platform for it, and it's really, really awesome, I think, for like weddings and graduation, or growing your family, or some kind of announcement. Now, it's not for everybody, and it's not going to be something you want to just splash on all your social media pages, probably. But if you want to like do a private page for 20 or 25 of your closest people, this is a cool way of doing it. And it's an ability to share with other people and create a more organic way of getting business too. So it's a neat opportunity for us. Again, it's still new to us. We've only been with CMG since April, so we haven't done a lot of these yet, but it's pretty neat. We had one instant where a member of CMG had a client using this program, and they were short on funds. They created this page for this person and sent it out to all the employees at CMG to help donate to her down payment. And within hours, she had an additional $15,000 and was able to close on her house.
That's so cool.
Just the power of of social media, the power of getting the word out to people. You might have buyers that are, have medical issues or any kind of crazy thing that happens in their life, and you come down to the wire and you're short $5,000 for funds to close. This program can help. And the funds don't have to be used for down payment. It can be used for closing cost. It can also be used it afterwards, and you can, use it to put a new roof on the house or whatever, or buy appliances. So it's a real cool thing, but it's called Home Funded.
It's really cool. Yeah. Thank you, Randy. Any questions about that? I guess one question I have, is there a maximum that can be collected for down payment?
Just $5,000 per person.
Okay.
So you can grow it as big as you want.
So go find 100 of your favorite friends or family.
Right. And
to contribute $5,000.
There's no age requirement either.
Can I sign up for that?
Oh yeah.
That's awesome. That's awesome. All right, Christy Sorenson, can you talk to us about renovation loans?
Yeah, we have, well, all of us probably have these, but renovation loans are really great in a couple different cases. They're helpful for clients who are looking to potentially get some equity in their home by maybe buying a house that needs a little bit of work, and they need to get the money right away, and they run that like a construction loan. So what they would do is hire a contractor, get the bids, strike up a contract with the contractor, pull out as much money as they need in addition to the loan to buy the house, and then fix it up according to what they need. Some people will go above and beyond what's required to close on the house. So maybe add square footage to meet their family's needs, or maybe just some cosmetic things that they want to get done, or they could just be doing the minimums to make that house financeable. So they find a house that's not ready to be purchased according to the loan program or the appraiser. There's some requirements that need to be done. Whether we knew ahead or we didn't know ahead, we could move to a renovation loan and get the money for the client to do that. Those are really great products. I've had several success stories with those programs. Because we do require a contractor, I wouldn't say that a client could count on really getting an undervalued home and getting it, immediately some equity in there. But it is certainly an option. There's several different products. There's the Home Ready, which is a Fannie Mae product, which allows you for small down payments. You can do it as a primary home, as a vacation home, or as an investment property, which is really nice. And then there's the 203K FHA program. 203K FHA program. And that one, they're only required 3.5% down, and there's a streamline and a full. The streamline is really handy. That's the one I probably had the most success with when there's just a few items, a few subcontractors needed. And then we can forego the main contractor and save quite a bit of money and get it done really fast. So that way the sellers aren't waiting a long time for everything to get done and waiting for a contractor to be able to work on it. It's a pretty complicated product. It's a hard thing in just a few minutes to really present, but the main benefits is you can buy a house that either A, you really like where it is, you love the bones, but maybe it doesn't have the garage you need, or maybe it doesn't have the one extra bedroom you need, and you can make that house fit your family's needs, and be able to buy where you want to buy. The other option is maybe it's a house that all it needs is a roof, and nobody can afford to do the roof, but this is the right house for them, and you've come to a great deal with the seller. We can do it that way as well. Let's see, what other questions might you have about that?
I just remember back in the day, it just seemed like these loans were really difficult. They just seemed to take forever. And so I don't know if that's still the case. I mean, you talked about the streamline not taking as long, and I can't remember the other one that you talked about.
Yeah, absolutely. The streamline is my favorite if it's a purchase, for that reason, because by the time you hire a contractor, get the bids, and get their start date and be able to be worked into their schedule, plus have all the add-on costs, sometimes the sellers aren't patient enough to wait for that, and they may say, no, we realize this house needs work, but we'll only take a cash deal. And sometimes they will wait. And in this market, as it's changing, we might see more sellers willing to wait for things like that. So this might be a more feasible option. But with the streamlined version, it's very fast, and we can do our part very quickly. The pricing is affordable. The closing costs are a little bit higher, so sometimes that can be an issue, but we can a lot of times work out something with the seller. Appraisals don't seem to be a problem at all right now. So usually can work something out to make it work for everybody, as long as, you know, everybody wants to roll their sleeves up and work together to get this done. And it's what it's going to take to get this house sold. That's usually the case.
Yeah.
It is a really good option for the right borrower and the right home.
Yeah. No, and I'm bringing it back up. I wanted you to talk about it because I do think that we're in a market that we can start using that again. It's kind of, we weren't in that, but I think we can certainly revisit it again. And just, there's a lot of different things that I want to bring to everybody's attention. It's like, you know, maybe consider this.
Yeah, I agree completely. That's why I sent it over to you, because I'm seeing a lot of houses on the market that some of these clients that are buying in this 450 to 650 range that are struggling finding houses that don't need work done to them.
Yeah.
And then they're kind of like, gosh, you know, I'm spending what they feel is a fortune on this house, which is accurate these days, but it's not really the house they want it to be. And this product can help them get over that hurdle.
Yeah.
And we can definitely help them with that.
Awesome. All right. Thank you. All right. Becky Ferrar, can you talk about the step up? So I wrote down step into dream home before selling current home.
Yes.
How do you do that?
So good. So the step up is basically kind of a 3-part thing, but we will, here's kind of the parameters. If you need to buy before you sell, we're going to set up a bridge loan on your departing residence. We can go up to 70% loan to value on that, so we can pull that equity out. We're going to close on the new property within 15 days. So there's no appraisal contingencies. We do just have to let the seller know that they'll need access for the permanent financing. So we basically close that first, the new purchase. We've got a bridge loan for your down payment. And you can use that bridge loan for down payment and the closing costs. They don't or anything like that. All properties are allowed. And then after, so you close on the first house, we've got the bridge loan on the second, and then we roll it into permanent financing, and we have to do that within 4 months. So you have 4 months to get your current primary residence sold. And so in these situations, we always want to talk to make sure like that the new home that you're purchasing is not in need of a renovation loan, that we're not going to have any issues on the permanent financing, which is basically like a refinance at that point. We want to make sure that we don't have any issues like that. So it's a lot of conversations up front, but it just allows people that don't want to make a contingent offer, that have enough equity in their departing residence, they're planning on getting on the market, to be able to get that loan they want closed. It's a benefit to the seller. That quick closing is super helpful. And then it's just really making sure that you can have your home sold within the next 4 months. And if not, of course, we can do an extension.
Cool.
Yeah.
I like that. I like that.
Yeah.
And I got excited about this as I was looking through the flyer this morning, and I thought, well, you know, here's another example of something that in our current market, I think you would have some real success with.
Yes, absolutely.
You know,
and it's easy when we have a great calculator. So it's an easy thing when clients are like, does this make sense for us? We just plug in all the numbers, and then you can see, here's what your payment's going to be on the bridge loan. Here's what your payment's going to be on the step up, and then the permanent financing. And they only have to qualify for the permanent financing. They don't have to qualify for the bridge loan or the departing residence. So that helps a lot with getting people qualified.
cool.
And the fast closing is helpful.
Yeah, for sure. Anybody have questions about that product or any of the others so far? All right, moving right along. Jennifer Rogers, Envoy Expand, Envoy Flex.
Yes.
What's going on there? What are those?
So basically they are bank statement loans. So we have products, I think it's a non-QM product. We are, these are delegated to us, in-house. So we partner with Deep Haven, and one is for people who are looking to put 10% down. Others are for people who are looking to put 20% down. Sorry, my dog. I'm so sorry. Hold on. Can you come back to me?
Yes.
Thank you.
Okay. All right, Melanie.
Hi.
So you've got some products too for real estate investors.
Yeah.
And
So,
yeah, and I saw you have a bank statement loan as well. I mean, maybe other people do too, but I just wanted to get it out there. I want to hear about it because I'm self-employed. I'm an investor.
Sorry to interrupt, Jen. Do you want to save that for Jennifer Rogers, and I'll talk about the debt service cover, the other program?
Yeah.
Yeah, and I think we probably all do have the bank statement program, and multiple, many of us may have multiple investors for it too, but let's have Jennifer get the glory there. And I'll talk about DSCR. So debt service coverage ratio. And it's not a new thing. It's something that's been around for a very long time, but it's been something that's been offered more as a commercial loan. It's been offered to business owners. And basically what's so really cool about it, Jen, you started out mentioning how, for investors, it's a really great time because there's still such a huge vacancy need, so many people that need rentals. So with the DSCR, it's looking at just the income coming from the property as a ratio compared to the debt of the property, right? So your operating expenses, which, you can probably calculate for your clients, or what we do is we have it as part of the appraisal orders. We order that operating rent schedule. And essentially, depending on how much somebody puts down or what their credit score is, and we go down to 620 on credit score, and you can even have a recent credit event with this, is we'll take either 75% or 1 is what it's called, where you have, so long as the income coming in from that rental matches, your operating expenses, that's an even 1, right? So we'll look at different ratios depending on how much down payment you have or whatnot. But the key part to this program, there's lots of them actually, for investors. I, for instance, have worked with an investor before who had 28 rental properties, and he had them each in an LLC. So that's 28 tax returns. That is a pain in the rear. Even if you only own 3 and you put them in LLCs, you just don't want to deal with that, right? And for the novice, kind of new, maybe you only have 1 or 2 rentals. As you build your portfolio, you'll learn more and more what a pain in the butt it is to go through the normal traditional financing. So this program, there's no minimum or no maximum on the amount of properties you can already own. So it's very common agency to have a limit of maximum of 10 finance properties. That's a normal kind of conventional rule. Well, this product, you can have 50, doesn't matter. And we only want you to qualify for the income coming in on the property you're purchasing. We don't need to see your tax returns. We're not doing income verifications. We're not doing debt to income ratios, nothing. So this is a dream program for, real estate investors who are looking to kind of expand their portfolio, not go through all that rigmarole. We do pull credit report, and like I said, minimum 620 credit. And but you can have a recent credit event. Of course, it depends on what that credit event is, right? You can't just file bankruptcy and be good. We've got to kind of dive into that a little bit. But the other thing that is really handy about this, you can close in an LLC. Sorry, I'm getting dings on my computer. You can close in an LLC. You can do it for a vacation rental. So you can buy VRBO, Airbnb, and there's a really cool site. And I think I put it in my email to you, Jen, where you can log in there and you can look up the area, Blaine, Bellingham, Seattle, wherever you want, and it'll give you all the stats on how, you know, these short-term rentals are performing and whatnot. And so we utilize a system, not exactly that system, but a system like that, which will basically give us kind of that operating expense of how is this going to perform. And we just want it to, we basically want it to break even. We're not looking for it to make you tons of money, and we're not looking at the rest of it. Let's see here, you can do ARMs, which many investors really like ARMs. You can do interest only option. We can do a 15 or 30-year term. You can have gift funds. So you only need to come in with 10% of your own funds, which, you know, traditionally gift funds are not welcomed in other realms for investments. So that's a really big deal. Let's see here. I'm just going to look to see if there's anything I kind of forgot. You can do purchase. You can do rate term refi. You can do cash out. And again, the big part to this program is you're just looking at how much income the property is you're buying compared to that operating expense and the, you know, the rent that's coming in from it. And that's it. No DTI. Don't want to see your tax returns. Don't want to see your pay stubs. Don't care if you own 50 properties. So for investors, this is
Cool.
really great new refreshing product.
Yeah, that's awesome. I love it.
Mhm.
All right, Jen, back to you.
Oh my gosh, thank you for puppies. Crazy. Okay, bank statements. So bank statement loans for the self-employed borrowers who are winning at the tax game, but claiming, you know, a very low net income. Traditionally, we have to go off of that net income that's shown on their tax returns. With these products, we don't look, like Melanie was saying, we don't look at your pay stubs, we don't look at your tax returns, we don't want to see your P&L. We just want to see either 12 or 24 months of bank statements. And what we do is we take an average of those deposits, and that's what your income is going to be. And so you can do this on primary, second homes, investment homes, single family, condos, townhomes, multifamily, rural. It's really open to pretty much everything out there. There's the 12 to 24 months bank statements. There's as little as 10% down, up to 20% down. The credit score, it's dependent on the credit score. So 20% down for 620 credit score, 660 and above, you can put 10% down. The debt to income ratio is the same as it is for conventional, 50%. And it's a really good option for people out there who are self-employed and, you know, wouldn't necessarily qualify for a conventional Fannie Freddie product.
Awesome. I love it. These are such great products, you guys. There's a couple more out there. You guys all are doing buy downs. You're doing lock and shop. Does anybody want to speak to that real quick? Anybody want to chime in?
I have a lot of success lately with my buyers and buy down and utilizing the seller credit for a buy down. You know, the best case scenario is a nice healthy seller credit that's going to cover the cost of a temporary buy down plus their closing costs. If we can get the buyer to just bring their down payment to the table, that's a huge win in my book. And I've been seeing that with quite a few of our files. It's a reduction in the rate, a temporary reduction. The thing that I like most about the temporary versus a permanent is that money gets put into a reserve account at closing and gets pulled from each month to reduce that buyer's payment. And so the first year, as we know, it's on a 2-1. The first year it's reduced 2 points or 2%. So say the buyer's locked in at a 7.5%. The first year it's going to be 5.5%. And the difference between that 7.5% payment and the 5.5% payment gets taken out of that reserve account. Say you refi at year 1.5, whatever the balance is in that reserve account follows your funding. So you don't lose it like you would if you were to do a permanent buy down and refinance prior to your break-even point.
Jennifer, thank you for bringing that point up, because it's been interesting how many people I've heard talk about that program, but not talk about that feature. And so many people are like, oh, I just thought that was money thrown away. No, like, that's still your money. It's still your money. So thank you for bringing that up.
I like to mention too that it's not just about maybe saving money up front for people that just want a short-term lower payment, but the real target, in my opinion, are people that are expecting a big raise, or clients I have that are doing that program right now are, it's a couple who's buying a home together, and one of them's still in school and will be graduated and fully employed before the end of the 2 years. So if perchance we don't get to refinance before the 2 years is up, they have other options coming for them in case it's feeling a little tight. Yeah, that's been a very popular product as long as the sellers are amenable.
And I
We-
think, go ahead.
We also have the option, if the borrower wants to pay for it themselves, doesn't have to be seller. We can also do a split between the seller and the buyer. I also have a buyer right now that's moving up here, works for the border, and his wife is pregnant, so they want to do the buy down. So until she goes back to work, they've got that lower payment, but it is a nice option that the borrower can do it themselves as well.
Awesome. Is there anything else that you guys are just like, I gotta talk about this? This is my favorite.
Let me see here.
I think many of us are having the quick close home equity lines and fixed rate equity now too. So that's a big kind of win for many of us to get those, be able to close it in 5 days and be able to do everything pretty much electronically. AI is kind of scary if I think too much about it, but one cool thing is the ability to do some loans like this where people can just quick pull equity and have it fixed or not, or revolving, and just be able to do it quickly. So let's say maybe they're not interested in a bridge or step up or whatnot, and they just want to be able to quick pull up the cash, put down. They're not worried about selling their home right away or whatever. It's just a good option. So that's one program I can think of that just the ease of how getting it so quickly. That's the impressive part these days.
The other part, if yours is the same as mine, is the house can be listed.
Yes.
Where if you go to a traditional bank to get a HELOC, the house can't be listed.
Yes.
So that's pretty awesome.
Yes.
And then in addition, I was going to tag on to one of Melanie's other products that she brought up too. Hers is probably the same. The DSCR for short-term rentals. Another benefit, another type of borrower that might benefit from that, and it can be long or short-term, honestly, is there's not a reserve requirement. So if they have a ton of rentals and they can't meet the reserve requirement, we can still get them in that loan. And honestly, with rates as high as they are with Fannie and Freddie right now, these one-off programs that used to be kind of too expensive, they're really not that much more expensive than the Freddie and Fannie programs right now. So they're a really great option. And I think that's part of why we're so excited about them.
Yeah.
I have another program for second homes. And I don't know if anybody has this too, but it's privately securitized loans. And this is designed to eliminate the LLPAs that were put in place recently on second homes and investment properties. And for those that, that may not be familiar with that, it's an additional fee that Fannie and Freddie had applied to, second homes and investment properties if you're not putting more than like 40% down, which is a huge hit, because back in the day you could buy a second home, primary, rates, 10% down or 5% down, whatever it was. And now it's gotten to the fact that if you don't have 40% down on a second home, you're getting charged 3.5 to 4 points for the same rate. So what we're doing is we have a second and an investment program where we're eliminating those adjusters. Minimum down payment 15% down. It saves the client about $20,000 on average. Like say if we're buying a $750,000 house with 20% down, you're going to save your client on fees alone 20 grand on a second home, 12 grand on an investment property, just in points. So it's a nice feature, especially on the second home, because a lot of the investment properties, there's a lot of other good programs like you're just explaining. But I think on second homes, this is a really neat, unique thing that not a lot of people have yet.
Great. Is it Janice or Janice? Do you have a question?
Yeah, question for you.
Oh, hi. I'm not sure. I thought I heard somebody else asking a question. Yes, we did. We were kind of a few clicks behind you. We were very interested in Becky's step-up loan. What are, maybe you can talk, is there
Just
someone
continue.
else talking?
Just continue.
Okay. Is there other strategies for making a transition from a current home where you're living that you anticipate selling and a new home? So with that, you know, that transition is just difficult.
Yes, and that's where the step up is really helpful, because it allows you to get your offer accepted on the new home without having to make a contingent offer. So if you've got the equity in your home, we utilize that equity to get you closed on the next home. And then that gives you that 4 months to get your current home sold. So it really is just about, do you have enough equity to pull out to utilize? And you can do minimum down, doesn't have to be 20% down. You can do the minimum down. And like I said, we're only going to qualify you on the final financing. So so it's a really good option, and being able to have a fast close.
Could you talk more about the final financing and what that means to us?
Yeah, so the final financing, you're basically refinancing, because we're gonna purchase the house on our portfolio loan. And so it's really just like a refinance, but you get to pick the terms. You can do a 30-year fixed, you could do an ARM, you could do a shorter term. It'll be based on whatever the current rates are. So it's really just refinancing into that permanent financing, whatever you want that to be. Like if you came your down payment and closing costs without having to sell, you pick what is the best financing for you. Does that make sense?
Yeah, I think we're going to have to probably explore this in more detail with individuals. So Becky, is it only Evergreen that has this step up option, or do
I can only speak for Evergreen. I'm not sure what the other lenders also have in this same arena.
Yeah, our product is very similar. I think Christy, you have a product similar.
We have a couple different options to bridge that financing.
I would say it's probably safe to say that mortgage companies compared to like a private bank or whatnot, mortgage companies are probably going to have access to an investor or a line like this versus, you know, more conservative like credit union or bank may not. So
we were brainstorming during that discussion, and I had said to Janice, this is John DeSocio, by the way, I'd said to her that maybe it would be a good idea for us, prior to really actively selling our home, would be to test it on the market for a few months, just to make sure that we're going to easily be able to make that sale to take advantage of that. Is that something, a viable idea, or what do you think about that?
I think that's absolutely a Jen question.
I was like, and I'm going to come right back to you, John, and I'm going to say, you know, it really depends. You know, we have these conversations all the time with our sellers, and it comes down to your circumstance. You know, what if we put your house on the market and we haven't identified the next place for you to move? That's usually the hesitation for sellers right now to put their home on the market. You know, and you don't want to shoot yourself in the foot, and, you know, maybe your home is really popular, and then you're like, just kidding. I wasn't really gonna sell after all, right? So I think you have to be careful. I think that, part of why I got all these great lenders on this panel is that they are all incredible resources, right? So I know enough as a full-time agent to be really dangerous. I know a little bit about a lot of different products, but if you can sit down with them and be really candid about what your goals and dreams are, they're going to help you find the right product to be able to navigate that, right? So, that's what I've done personally. It's like, okay, this is what I'm really trying to accomplish. And they have a whole quiver of different products that are available to them. And I feel like we just kind of hit the tip of the iceberg today. We've had clients that, have a home equity line of credit just sitting out there just so that, if the right house comes up, they can pounce on it. Now that may or may not be the best strategy for someone. And that's why it's really important to sit down with one of these folks and come up with a game plan and see what's going to work for you.
Yeah, it's just typically in the past, we are now both retired. So typically in the past, we would actually look at just going into a new community. We've made a lot of travel in this country back and forth to different cities, just the way we like to live our life. And we've always moved into a rental and then had a chance to actually get a sense for the community and where we want to live. But this, we're going to stay in Washington State this time. And so it's going to be a little bit harder this time because we want to not have that rental. We want to go right into that home. But the idea with all of our stuff from some 70 years of collecting, to be able to quickly turn that around and find a home and get into it and sell ours is a challenge. And that's what we're trying to come up with strategies to make that work.
Yeah, John, many of us probably also have a more traditional bridge type product where maybe it's a 12 months. You have 12 months before you sell yours. So I think, Jen hit the nail on the head that, sitting down with any one of us or all of us to look at your situation and see, what products do we have and which ways we can structure it. It could be like Jen said, getting an equity line that just sits there. And that way you're ready to kind of pull on it when you want to buy something, or doing a more traditional bridge loan where you have 12 months to sell.
So like an equity loan, is that something you could actually move forward on the purchase of the home, but kind of almost not really totally commit to it? But yeah, I don't. And again, I don't understand a lot of.
So an equity loan can be used either on your current home to be able to pull equity out of it so that you can put a large down payment on your purchase.
Okay.
And then so long as you still qualify for, the house that you have and then the new house and the HELOC, then that's a really great option. Especially in a market, things aren't moving as quick as they used to, but if it's a really well priced home, it's still going fast. That's a really great option just to be able to have that cash ready. Can also look at doing, maybe you have money for a down payment, but you want to have more money for a down payment. You can use an equity loan to help purchase, and that equity loan would just go on the home that you're purchasing. Yeah, it depends on how you want to structure it, but there's a lot of different ways you can use an equity loan.
So it sounds to me like that during that period of time when you have the bridge loan, you actually make two payments. You make your existing mortgage, plus you also would have payments on this home equity line that you have in reserve for a new home purchase. Is that correct?
If it's in reserve and you haven't taken that money out, so think of it as just a checking account. Let's say you get an equity line of $200,000. You get a checkbook that you can write and spend that money at any time, and you're not paying any interest so long as you haven't put that money and actually spent it on that new home. You're not paying anything on it. You might have an annual fee, depends on the product, but 75 to 150 might be a normal kind of annual fee, just for the luxury of being able to have that money, at your fingertips. But you're not making any payment on that until you actually, the title company cashes that check for your new house.
That's helpful. Thank you.
You're
Yeah,
welcome.
there are definitely lots of options, and any
Mhm.
one of these fantastic lenders would be able to help you navigate through those. We just kind of threw out a couple of ideas for you.
Yeah.
All right. Well, if there are no other questions, I just want to say thank you to everyone who showed up today. I know I learned a lot. This has been recorded, so we can send this out to everyone. I'm also happy to attach all of the various flyers that I've received, if that's helpful for folks too.
Sure.
Awesome.
Thank you.
Well, thank you all again.
Thank you.
And
Thank you,
have
everybody.
a great rest
Thank
of the
you.
day.
Thank
You
you.
too. Thanks,
Have a
everyone.
great
Thank you.
afternoon.
Hey.